All right, traders, this is Christian from Hertz Tribeca Trade Group, and this is your end of day recap for Friday. And I don't usually do an end of day Friday recap unless there's really something interesting that's going on. But I thought today's price action and some of the trades that went up were particularly interesting. So let me just kind of start with how the day went. I have up IWM, the small caps ETF. A lot of volume. You could see the volume in here was pretty heavy, and on this slide, so a lot of selling taking place, and it looks like somebody wanted out of IWM pretty quickly. So this was in the first couple of hours. Again, this is pretty much set selling liquidation that happened, and then it started to kind of drag some other things. S&P was up for what I think a good hour or two. It's kind of around maybe not that much. Yeah, about 10:30ish. It looks like we were okay, and then we really started to kind of follow IWM. There was a little bit of, I would say, for the day, a bear flag where we kind of hesitated. We were only down 20 basis points right around here, and that was up until about 11:30. And I think people really started to kind of take note of some of the selling pressure that was happening, and the S&P went down pretty hard, down about 90 basis points, and not much of a recovery. And then the same thing, of course, happened in the Qs, or I have Nasdaq futures. Probably in the middle of that, IWM and SPY, did a similar little bear flag. This was down about, I think, about a 0.5%. And then really the bottom was let go there in the Nasdaq futures. And again, none of these really kind of came back. There's no bounce at the end of the day. It's kind of tough as well on a Friday to really get a big bounce going into a weekend where people probably just don't want to put on a lot of risk, myself included, to really go ahead and buy the dip in some names. So what I also thought was pretty interesting, and I know most people associate small caps IWM, but there's also a lot of positioning that goes on within the. You have to remember the IWM is a Russell product, and that's Russell small caps. There's also Russell large cap indices, ETFs and indices. People forget about these. I think this came into play when people really started to see on the Russell rebalance, which was about a month ago. They're like, well, I don't understand the Russell rebalance. That's for small cap names. No. There's there's large cap ETFs in there too. So one in particular is the IWF. So this is a large cap ETF. It's Russell 1000 growth. Right, so it's a little bit different than S&P. S&P is 500 names, and you got a little bit of everything in the S&P. This IWF is basically all growth. Now they also have value indices as well. So they've got two. Basically, they've got two growth indices, both large cap and small cap, which is IWO. I'm going to get to that one in a second. And you have also two value ones, IWD and IWN. I think the IWD, I forget these sometimes. I have to remind myself because I don't look at these every day. But IWD is large cap value, and IWM is small cap value. All right, so those are the four different kind of style indices. And the reason why I'm going into detail about this, and which I don't normally do, is because there's a pretty big unwind that happened today in IWF. Take a look at this. First of all, I think they printed this way outside of the context of the bid-ask spread, and they printed 3.8 million shares. So think about this for a second. And I think this kind of gets lost on people sometimes, but take a look at the dollar value that has to trade for a 3.8 million share trade. It's a $148 stock. So how much is that notionally? And I have the prints up here, but it's $576 million in one trade in a couple hours. So I think there was a pretty decent liquidation that happened here. And if you go through the names that are in this ETF, it's all the names that you're well aware of: Apple, Microsoft, Amazon, Facebook, Google, Visa, United Healthcare, Home Depot, Boeing. So all these names, you could look at these names one by one, and basically, how the market maker trades this, or the block trader, at a particular broker. I mean, this is what I used to do in my institutional trading career. You don't trade the ETF per se. You trade the underlying basket, because the liquidity is in the underlying basket, right? And I know that's a little bit difficult for people to absorb right away, but in any ETF, you could trade the underlying, but the market maker who has access to do this will go ahead and source the liquidity through the underlying basket rather than just trade the ETF. This will make sense to you if you ever see, an ETF that doesn't trade much, like trades 20,000 shares a day, and then all of a sudden trades 2.8 million shares, and you're like, how do they do that? It's because they're actually trading to facilitate a large institutional order. They're actually trading the underlying basket. So what will happen is if a broker wants to go ahead and sell 3.8 million shares of IWF, what will happen is the broker will go ahead and start selling all the components of the ETF. And then what they'll do at the end of the day is called a redemption. The broker will be sitting short a large basket of stock and long a position of IWF because they sold a position to, to an institution who wanted to sell, right? So the broker becomes long. They sell the underlying basket. They're basically long and short, right? As long as they they have this all built into the trading system. But the broker will set short the underlying basket and long the ETF. At the end of the day, what they do is they call up the ETF provider, which is in this case iShares, BlackRock, and they'll say, hey, I need to do a redemption. So they'll actually deliver the basket versus the shares of or they'll send over the ETF to the fund, and the fund will deliver longs versus the broker's shorts, and that will collapse the broker's position, right? And you'll see what's called a creation or redemption. T+1, it gets recorded, and that's how you'll be able to see if somebody was buying or selling, basically. And you'll see the outstanding shares of the ETF go up or down, right? And by the way, an example of a name that doesn't trade much, you could look at this from yesterday, is FBT. Take a look at the volume in FBT. Trade 70,000 shares, traded 2.5 million shares, right? So how did they do that, right? So they traded the underlying basket. Okay, so this happened today, the 3.8 million shares. Then if you go over to the small caps as well, you'll also find a huge block that went up over here, right, on the lows of the day. This one they didn't sweep, but it was a sale. So same thing, big volume. Look at the volume. They probably traded the underlying basket, maybe a little bit more of the ETF. This one, because the names in this one, because their small caps are a lot more liquid. So again, the market maker will always go and they'll trade what's more liquid. So I think in IWO it's a combination of the ETF and the basket, and you could see that print went up here. If you go IWO and we do QR, and I put in I just want to see the largest prints here. Oops. So let's do, why is this here? Let's try this again. All right, so I just want to see prints over 200. So you can see another really large print. So how big is this one? This one was for IWO. Oops, I don't have this one in here. But it was, I could do the math on this. Yeah, it was $163 million, right? So these are really, really, they're legitimate size trades. These are big trades. So it's literally going to move the market, and it's going to move all of small caps, and so on and so forth. So now I think what they did was they went into not this one, but this one, IWD, and you could see this one outperformed. This one's was only down 30 basis points today. So again, I don't think they went one for one out of growth and into value, but I do think this one was bought, and you could tell by the performance, only down 30 basis points today, versus the whole small caps being down 1.8 1.8, 1.9% today. So, I always like to go over these things because people always speculate. Oh, maybe there could be a rotation out of growth and into value, or out of this sector and out of that sector. This kind of proves that you're seeing money actually left. So that's one, right? I think a big rotation out of growth names, both large and small cap names, were rotated out of today. And again, this is just probably one particular fund. This isn't the whole market, but somebody did this today, and somebody, a pretty big player in the market did this, right? Considering 600 how big was that trade? Did I say 650 million dollars? Sorry, I got it completely wrong. $576 million, right? That's a decent sized player. The other thing that we're seeing is rotation into emerging markets. So, pretty interesting. Take a look at VWO, which is one of the emerging market ETFs. This is managed by Vanguard. The other one that everybody knows is EEM, which is managed by iShares. Very similar ETFs. One has South Korea in it, one doesn't, and that's mainly one of the only differences between the two ETFs, other than the management fee is different. But very similar ETFs, VWO and EEM. So we were kind of discussing this in the trading room and kind of thinking, oh, maybe this is like another value rotation. Well, not necessarily. The basket that they're holding in VWO, again, always important to see, instead of just characterizing, oh, it's emerging markets, I know what this is. Well, take a look at the holdings that are in this. It's Tencent, it's Baba, it's a bunch of other names too. You got China Mobile in here, a couple China Construction Bank, so some of the names that are in FXI as well, some of the financials that are in there. But you also have Taiwan Semi. You've got, notice that you don't have Samsung in here. Samsung is in EEM. So again, that's one of the main differences between these two baskets. Let me refresh that. But yeah, there's Samsung. It's 3.7%. So again, it's a pretty large basket. The biggest holding is Tencent, which is 5%. So there's not a big skew there in terms of holdings. But I would not necessarily classify this as value. However, if you start to kind of look at the relationships, and so let me go through and give you the activity first, and then we'll bring up a couple charts. You could see that a lot of what EM went up today was buy rights, which could mean they're substituting out of stock and into options. Not exactly sure there, but there was some that went up. And the reason why I bring up the option flow is because it's a couple days this week that we've actually seen call buying like this in EEM and FXI. That looks like buying. This was earlier in the week. This was Wednesday. There was 29,000 of these that were purchased. Again, pretty far out of the money. But someone is looking, it appears, for emerging markets to go higher. So what does this look like in terms of relations? So I showed you the VWO cash buying. There was 2 million shares that printed basically on the lows of the day. Again, this had impact as well. This moved up emerging markets, that basket. It's a very liquid basket. It's a very liquid ETF. 2 million shares, believe it or not. Same thing for EEM. People can really kick this stuff around in couple million share counts. So it's, believe it or not, it's not that. And keep in mind, the blocks that I was showing you in IWF and IWO, those are around $200 stocks. So you have to fixate on the whole notional of the order. This trade was not nearly as large as the IWF or the IWO, but it does look like there is some kind of changing around. So if I were to bring in here, I've got a couple relationships that you could look at, which I think are pretty interesting at this point. If you look at these, I want EEM. Let's see, EM versus SPY. So take a look at that, right? I could bring this up, but it's a pretty simple chart to kind of look at over the last. Maybe I could do it here. It looks a little bit less noisy. May not let me do that, to go that far back here. Nope, it's not going to let me do it. But you can see, I think this is a little more than a 1-year chart. Is that right? Nope, it's just a 1-year chart. But you could see basically that really emerging markets have been trailing SPY, and it looks like it's trying to base here. So there's looks like a pretty defined relationship here. And to kind of look at this over a little bit more time, for a while in 2017, emerging markets were outperforming SPY, and then they really have taken a dive. Also, what I've seen in the flow, in the flows that I analyze every week, is there's kind of been a buyer strike, not only in emerging markets but international ETFs. But we started to see for the first time in about a month last week, some rotating into a couple of the emerging market ETFs. Not huge, but something a little bit of a trend change. An area that probably saw outflows for I would call it actually 2 months, and not every week heavy outflows, but there was some buying last week. Also, if you take this a step further, which I think is interesting as well, if you look at this EEM versus IWM, because I think the dollar is really at play here as well. I think IWM has kind of been an area to go into with the dollar getting stronger, right? The dollar getting stronger, you can make a case for that it hurts companies with a lot more international exposure, such as companies that are in the SPY ETF, larger companies, probably get hurt a little bit more than small cap companies that don't have more of their business inside the U.S. borders, right? So this has even gotten a little bit more dramatic because the dollar has gotten stronger and money has gone into small caps, right? So if you look at this relationship, if you really wanted to do a pair trade here, you could go long EEM and short IWM, and you could do that through ETFs. You could go long EEM and you could go short the inverse IWM. Sorry, you could go long the inverse IWM in case your broker doesn't let you short. So you can do that type of a trade if you like, or if you're just looking for a little bit different exposure, you could also tone down your exposure in the U.S. and maybe beef up your exposure in emerging markets, which I think is interesting. What will be needed, I think, for this trade to also work? I mentioned the dollar a couple times. If the dollar gets a little bit weaker, I would think EEM will go up. And plus, keep in mind, any of these international ETFs, you're dealing with a basket that is in local currency. So you do automatically have exposure to the dollar directly. Because any of these international ETFs, unless they specifically say that they hedge out the dollar exposure, when you go long EEM, you are short the US dollar. Because again, the equities that are being held in the underlying ETF are in local currency. All right, guys, so that's it for today's video. I am going to be doing a webinar on short-term option trading tomorrow. You can find that on my Twitter page. You can find the sign-up link. But I thought today a couple of these relationships are pretty interesting to look at. From just a strategy standpoint, really what kind of helps is to really try to stay as objective as possible. I know, one of the things that I struggle with sometimes is when you're doing very well in a group of stocks and then having to kind of completely abandon that group that, has brought you nice returns and that you're very comfortable with, and, making a little bit of a switch over to some different names. It's easier said than done. But I think if you kind of take a step back and look at it objectively, I think a lot of these other areas may start to see some money being rotated around, just like we've seen today and a couple of days back in emerging markets as well. All right, thanks for watching the video and have a great weekend. Hope to see you in tomorrow's webinar. Thanks.